Is a sharp increase in inventory going to wipe out the Los Angeles real estate market like we're seeing in many cities in Florida right now? That's the question we're going to answer in this week's Los Angeles Real Estate Market Update. I'm Jon Schwartz, a real estate investor and realtor in Los Angeles, California, and this weekly market update is brought to you by my boutique agency, Househack Los Angeles. Buy better and sell smarter using data and strategies that take full advantage of LA's unique real estate market, which we'll get to in a second. But first, we have to frame this conversation about inventory by looking at the national numbers, the state numbers, and then ultimately we'll get to our Los Angeles numbers. So nationally, new listings have been elevated over last year's numbers every week of the year. This blue line here is 2024. The orange line beneath it is 2023. And as you can see, 2024's new listing numbers have been above 2023's new listing numbers every week of the year. Now, new listings build on top of each other, so what we get is active listing numbers that have been growing consistently since the beginning of the year, in blue here. You can see that since the beginning of the year, there's been a serious divergence between 2023 and 2024. We're now 11.8% higher than we were last year in terms of active listings. What's also worth noting is that our current level of listings is right around where we were in late June, early July 2022. That's when prices began to tank in 2022. Now, obviously, the dynamic in 2022 was a lot different because rates had started to climb and were making their ascent from south of 3% to north of 7%. But it's worth noting that the level of inventory on the market right now is very similar to where we were when prices began to tank in 2022. So nationally, we do have an indication that maybe, prices are going to start cooling. For some statewide analysis, we go to this Housing Wire article that came out this week, the Texas-sized problem with housing inventory figures. So I'm going to read a sentence or two to give you a sense of what's going on. More than 556,000 single-family homes were available for sale nationwide as of last Friday, according to the latest data from Housing Wire sister company Altos Research. That puts the national inventory up 31.9% year over year. So there are almost 32% more houses on the market right now than this time last year. That's a big number. So are agents and brokers flush with home listings? Likely not, as listings are still a fraction of their pre-COVID levels despite the strong year-over-year growth. So that's the first thing to note. We're not back to pre-COVID levels yet. Can we have a market crash without even getting to pre-COVID levels? Absolutely not. So don't worry about a big crash. The article goes on, but there's another reason national listing growth isn't a boon to all housing professionals. The growth is highly concentrated in just Texas and Florida. And there's a couple graphs below that really demonstrate this visually. This graph shows listing by state at month end. Now, these chunks down here represent 47 of our 50 states. The smaller squares within these bars represent the middle 50% of those 47 states. Up here, we have our three outliers, 3 states that have a lot more listings than every other state in the nation, and they are California, Florida, and Texas. Now, if we look at the growth in listings in California, Florida, and Texas over the last year, we see that California actually has not too big of a growth compared to 1 year ago. 1 year ago, in May 2023, we had 28,000 homes listed on the market. And now in April 2024, we have 34,000 homes listed on the market. In contrast, you can see that Florida has really had this incredible uptick in listings from 47,500 a year ago to 76,000 last month. And Texas hasn't had quite as dramatic a growth, but it has still seen overall in the past year a pretty significant growth in listings. From a year ago, 66,000 to last month, 94,950 active listings. There's one more graph in this article that I think is really telling, and it's share of national listings held by the most populous states. Now, the black line here is Florida, and as you can see, Florida, a year ago, this is actually a graph covering 4 years. So pre-pandemic, let's say the beginning of 2020, Florida had 9-point-something% of all listings in the United States. Today, Florida's up at 14%. Texas, which back at the beginning of 2020 had 10-11% of all listings in the United States, is now up at 17%. Meanwhile, California, our home state, is at 6.1% of all listings in the United States. Pre-pandemic, we were 6 point something, a little bit lower early in 2020, a little bit higher. Well, that's I guess that's post-pandemic. So looking at the pre-pandemic California numbers, we see that California, our listings as a percentage of listings in the United States did balloon in 2022, but we're now back to our average of 6-ish% of U.S. listings. And what's interesting is when you compare the percentage of U.S. listings for these states to the percent of the population for these states. I looked at the numbers. I looked at the U.S. Census Bureau numbers dated July 1, 2023 for populations for the states and for the country. California right now is 11.6% of the country by population, but only 6.1% of the country's listings are in California. This is why California is a good market to buy into. We are seriously housing constrained. Meanwhile, in Texas accounts for 17.1% of U.S. listings, but Texans only account for 9.1% of the U.S. population. This is why property is way less expensive in Texas. In Texas, you can buy like a 5-bedroom house on an acre for $1 million. In Los Angeles, you can buy a 2-1 starter home for $1 million. Supply and demand, people, that's what dictates pricing. All right, let's get into Los Angeles now. So the new listing story in Los Angeles is similar to the national story. 2024 is here, this orange line, and 2023 is this blue line below it. So you can see that Los Angeles has seen more new listings every week since the beginning of this year, and a nice little uptick this most previous week. I'm working on the diction. However, the active listing story for Los Angeles is something else. Again, we have 2024 in orange and 2023 in blue. We started at a huge active listings deficit this year compared to last year. So even though new listings was always outpacing last year, it took a while for this year to catch up with last year, which we did in end of February, beginning of March. Now, since then, this was a little peak in active listings. We flatlined, and then we had a nice little uptick recently. Let's turn off 2022 so we can see this a little better, right? Active listings grew, caught up, flatlined, and then this past week we've had a little uptick. So aside from this week's uptick, why did active listings flatline for the past month? That's because the number of homes sold has been growing all year, keeping pace with last year. We had this nice stretch, again, the orange line is this year, we had this nice stretch over the past 6 weeks of more and more homes sold every week. So when lots of homes are selling, even though more homes are coming to market, the inventory level stays flat. Now, we can see this past week there was a little bit of a dip. So the question is, will home buying remain strong, continuing a flatlining of inventory, or will home buying weaken, allowing for more inventory and some price declines? Of course, to answer that question, we look at pending sales. Pending sales is a leading indicator because it tells us where the market is going. And it does that because pending sales become homes sold in about a month. And we can see that very well correlated on the graphs. We see this peak right here of pending sales, and this was through the end of March with 1,224 pending sales. If we hop over now to homes sold, we can see a peak in homes sold. And this was right here at the end of April with 1,026 homes sold. So hopping back over to pending sales, we see that since that peak, pending sales dropped off, but picked up this last week. What does that mean is going to happen in homes sold? That means that in homes sold, we should see this decline continue for about a month. Now, if homes sold continue to decline for a month and active listings stay hot for a month, we're going to see an inventory increase over the next month. That's going to make May perhaps a worrisome time for sellers, but a great opportunity for home buyers. But going back to pending sales, we see a 1-week uptick this week. We're going to have to keep track of this to be able to look further into the summer to see what the housing market's going to look like through the summer. Also, with Friday's somewhat weak jobs report, there's an expectation that rates are going to soften up in the next couple weeks, and that might pull more buyers into the market, and they'll suck up more inventory, which again will keep inventory levels flatlining and won't allow for that price relief that a lot of home buyers are looking for. Subscribe and hit that bell icon so you get next week's update as soon as it comes out.